So a great keynote on how digital payments and alternatives to cash are growing digital commerce from global growth markets. This is incredibly relevant to our region. E-commerce growth is something that we've been talking about for a number of years, and it's in a process of really accelerating, really changing, really electronifying. So I'd like to welcome Tom MacDonald, Managing Consultant and Financial Services Practice Lead for Global Growth Markets. Thanks, Tom.
Great, thanks very much. It's a pleasure to be here, everyone. As you mentioned, I'm Tom MacDonald. I work for a company called Global Growth Markets, where I lead the advisory consultancy section of financial business services and digital payments. So we work with a lot of digital payment companies around the world, and what we do is we help them move into growth markets or grow in growth markets. And we work with a lot of ecosystem companies as well, so that includes e-commerce, that includes banks, that includes investments. And what I want to touch on here today is a little bit about what our thoughts are on the GCC countries in terms of digital payments and e-commerce, and why we think that the growth prospects are generally undervalued when we talk to our clients and we talk to other research firms. So I'll present a little bit of information around that. But I also want to talk about some of the experiences that we've had in other geographies and how they parlay to the GCC and what kind of experiences, and hopefully present some information that will give everybody in the room something to leave with, something tangible that they can use in whatever area that they're working in right now. But I'd encourage anyone to just put up their hand if there's any questions, comments. It's always a little bit more interesting when it's interactive too, so that's fine at any point through this. So what I want to start with today is just kind of the GCC from a helicopter view, where it sits when we're talking to our clients, whether that be e-commerce companies from the US, e-commerce companies from China, or payment companies from anywhere in the world, or London. The first thing that jumps out people ask is, okay, what's the market size? And this is what the market size of the GCC looks like relative to other growth markets around the world. So those are kind of developing markets or areas where you're seeing a high percentage compounded annual growth rate for the retail e-commerce market. And that usually grows or is very closely tied to the digital payments market. And I'm going to go into a little bit more detail here about why I think that doesn't reflect the true situation. But before I do, I just want to dive into the GCC itself and some of the statistics that we generated through primary research when we're talking to e-commerce companies, payment companies, and other financial players in the market. There are probably not very many surprises here for people that work in this area, but Saudi Arabia and the UAE obviously capturing the lion's share of the market in terms of retail e-commerce, with Saudi Arabia growing slightly faster than the UAE. But what I want to focus on in this presentation is the cash on delivery section. So while this is a digital summit, our GGM's approach to cash on delivery is that's an opportunity for digital payment companies. We've seen this around the world, this trend continue as e-commerce continues to develop in new markets and digital payments become increasingly better, that share of cash on delivery declines as a payment method for buying things online. And the share as it declines, that goes to different companies. It can go to banks if they're innovative. It can go to digital payment companies if they've found a niche, if they've found a need in the market and they're able to address it. And that's largely where we work, is helping companies find what those needs are. So you're seeing about 58%, give or take, per country of cash on delivery in retail e-commerce in the GCC right now. So taking a step back here and looking at the Middle East GCC countries from a different perspective, things start looking very differently once you get into the granular data. So now you're seeing the same geographies here, but on a per-person basis. So you'll see, and this is spending on retail e-commerce, right? In 2017, the GCC was already ahead of Eastern Europe, already ahead of Southeast Asia, already ahead of Africa. And it's that difference is expected to just continue to increase massively for a few reasons that are fairly obvious to anyone that actually works in the GCC or lives in the GCC, where incomes tend to be a lot higher in the GCC than in other developing economies. There's no shortage of smartphone usage. There's more than one per person. And people tend to be younger as well, too, relative to the other places that we're looking at. And young people, of course, tend to be the first adopters of alternative payment solutions, the first people to shop online, etc. But just speaking, what I want to focus on here is, I don't want to present a whole bunch of information about the Middle East. What I want to do is kind of talk about the how we get there. Some of the problems that other geographies have faced along the way, and the solutions that they've found. Some of them are high-tech, some of them are extremely low-tech. Some of the ways that e-commerce and payment companies have found that are able to open up new sections of the market. So India was mentioned a little bit earlier on the stage here, and there's just been a massive amount of innovation in India throughout the country, and they've seen continued significant growth in e-commerce and digital payments as smartphones have gotten cheaper, as there's been more internet access, as incomes have grown as well. So on the green bit here, you'll see that that's the retail e-commerce market growing. It's growing very consistently, growing a lot, and it's large and going to get larger. But interestingly, the red line here indicates the percentage share of cash payments. So something that India has been working on for a very long time, and companies in India is slowly chipping away at the share of cash on delivery without losing any of that growth. So they're still finding ways to attract new people to e-commerce that have a fear of fraud, don't have a bank account at all, are generally just inconvenienced to use a digital payment method, or a multitude of other reasons that I could list. But they've used a whole bunch of little methods to kind of wean people towards digital payments very slowly. And just to kind of list off a few of them really quickly, some digital wallet companies, like Paytm being one of them, offer steep discounts for purchases using a digital wallet. So once you make a few purchases online, you'll be able to access the Paytm website, and you'll have accrued some points, and you can buy something at 70% off, for instance. A small fee for using COD makes a big difference. Even if it's a relatively insignificant amount of money, it's enough to make somebody take their wallet out of their pocket and put in their code, their credit card details, or what have you. Cashback offers for digital wallet payments are huge. Anything that accrues payment or accrues points as well. And then COD for new users only has been extremely successful in still attracting that kind of latent section of the market that is in lower tiered cities, rural geographies, the unbanked population. So getting them to make that first transaction, getting them to be comfortable using e-commerce, and then making that important switch where they start using a digital payment, and then they become comfortable using that, and they become a return customer, and they've captured that customer and transition them to a digital payment. And lastly, installment payments, which brings me to my first case. So this has been something that's happened in India since kind of 2013 to 2016 it transformed e-commerce companies and increased revenues just absolutely massively, and a somewhat counterintuitive approach of attracting or encouraging people to use a digital payment method by asking them to spend a lot more money. So what they did, and which has been done in several other countries around the world now, is started offering things that are much more expensive, like dishwashers, refrigerators, computers, mobile phones, etc., and allowing them to pay in a way, or pay in installments. So they would pay over a period of 2 to 4 months. And this did something really interesting. It required trust on the part of the e-commerce company and the payment company to say that to give somebody something before they'd fully paid for it. And it also required trust on the part of the buyer to be able to pass those credit card details on to that company and understand that there's going to be money taken out of that account every month for the next 2 to 4 months. So it did something really important in a few things really important. For one, it increased revenue by 27%, which was a huge amount of money, and it also kind of locked in customers to buying a different category of goods than they would have conceived of doing previously. So if anybody in the audience is from Turkey, you'll know that this is the case there as well too, where larger than 60% of purchases are made in this way. And this is something that, well, whilst I'm conscious that none of these examples can be exactly parlayed into the GCC or the Middle East countries, but I hope that there's some use for some of these and you can get some traction and some ideas and it can spur some conversation. So another interesting fact that we find when we're in countries that have developing e-commerce markets is the existing players in this country, the retail companies, they often have this perception that there's going to be a whole bunch of new products coming into the market from different geographies that are going to be they're going to underprice them and push them out of the market. And we find this, an interesting kind of little niche area in this is companies that are local, that either serve a local product or they have a selection of products built for a local audience, and they service them as that local audience likes to be served, or they tap into some kind of niche offering, actually see their sales skyrocket. And we're already seeing this in the GCC countries that we're talking to, or the companies within the GCC that we're talking to, in kind of luxury e-commerce being one, where they're seeing demand as much as 70%. One of the companies that we talked to just a few days ago told us that they'd forecasted maybe 20% of their sales would be international, and now they're seeing 70% of their sales go international, because it's underestimated how many people from the Middle East live around the rest of the world, and as well, how many people around the rest of the world are interested in products specifically designed for the Middle East. And the same has been true in India as well. We've talked to C2C C2C e-commerce companies where they're launching platforms, and they're seeing more than 50% of the products on their platform being shipped outside of the geography that the page exists in. So the last example I want to get to, and then I'll open up to a few questions if there are any, is something really interesting that happened in Thailand. I was working in Shanghai at the time in about 2015, maybe the end of 2015, was the market in Thailand in e-commerce and payments became really, really competitive. There was a whole bunch of kind of influx of foreign investment at one point, and there was 3 market leaders that were vying for a whole bunch of latent sections of the market, so kind of lower tiered cities, rural geographies where there was millions and millions of people that had never shopped online, and they were fighting to be the first ones to access those. So they did something really interesting as they introduced 3 things at the same time. Cash on delivery, no questions asked returns, and free delivery. And in accomplishing their goals, a tick box, it completely worked. People started buying things almost immediately, and the sales skyrocketed, but it was financially unfeasible. The amount of returns that those companies were seeing skyrocketed. The amount of reattempted deliveries, managing the cash was just extremely expensive, as well as kind of a myriad of other impacts for kind of pushing people maybe a little bit prematurely to buy things that they didn't really need or want. Maybe they were just testing the waters to see how e-commerce worked, because they had no incentive to actually show up to accept the goods, or maybe didn't even want them so much in the first place as just trying it out. So the companies there needed to retain those customers and then move along, but find an alternative way to deliver those goods to them. So they did something fairly low tech, and it came from knowing their customers at a very deep level, and knowing their country and knowing what was available, resources around them. is they partnered with a whole bunch of convenience stores around the country and post offices. And what they did is they allowed people to, that were uncomfortable making payments online, is to print off a barcode that they could take to their local 7-Eleven or whatever convenience store was closest to them that could be scanned there, and they could pay using any method they want. And that addressed the issue of cash on delivery in large part, and it cut down costs significantly. But they didn't stop there. They took it one step further, and they said, you know what, we're also going to deliver it to this little convenience store. We know it's open nearly 24 hours. We know it's located all the time. We know that someone's always going to be there. So it cut down on a whole range of costs, and now people could go to work, have a package delivered, pick it up on their way home, no questions asked. And on the side of the e-commerce company, it smoothed out the payment process, smoothed out the logistics process completely, where they were able to not just cut down their costs, but communicate more clearly to their customers when it's going to be delivered, how long it's going to take, how much it's, they could effectively assess the cost of that delivery as well too. So it ended up kind of spurring on the e-commerce and digital payments economy in Thailand, and it remains a massively important payment method and growing payment method. I think actually in our analysis we find that this payment method is growing faster than cash on delivery still. Just recapping here what to expect. So looking at the GCC, there are a whole bunch of things contributing to growth in e-commerce and payments right now. But there are also constraints, and the constraints have been holding back growth and will continue to hold back growth for a little while yet. And some of those constraints are the logistics and delivery are still in need of improvement, but progress is being made for sure. Something that when we talk to the supply side and demand side of the market, we're hearing that people aren't confident. They order something one day, and the delivery time is going to be 4 to 6 days, and it shows up in 2 days. It's hard to tell when you're going to be home, how that delivery is going to be made, and of course, those things factor into the decision to purchase something again, and it's hard to be at home for a delivery or buy something important when you don't know when it's going to come. Fraud and fear of fraud are real concerns that are constraining growth, no question about that. In other e-commerce markets, we've seen that there are some stopgap solutions. In India, they've largely, in large part, kind of leapfrogged a lot of the traditional payment methods, and there's a big push for e-wallets right now. The government is backing e-wallets with the UPI scheme, where they're developing their own payment systems. There's demonetization, where they're generally just discouraging the use of cash and trying to move people to e-wallets. But what that does from a fraud perspective is it limits your risk. If you put $100 in your e-wallet, you can only lose $100. And if you happen to spend that and it works out, there's a limited amount of risk around there as opposed to a credit card or a bank account for information. But that's a concern that does need to be addressed. And then last one is that I hear this really often, and it kind of confounds me, is that there's not a limited selection of goods in the GCC. I think this is a little bit funny, but because there's so much shopping. There's no shortage of malls. I'm staying by the Mall of the Emirates right now, and there's definitely no shortage of available goods there. So if everyone can kindly move all of those goods online and see to that, we'll kind of nip that one. And then just recapping what the opportunities that we see here are, is that cash on delivery should be viewed as an opportunity. It is usually captured by digital payment companies over the course of years, and it's not a very nice process. It's quite laborious, and there's no silver bullet for it, nothing that works every time, and nothing that will work in one market and just completely transition people to digital payments. But it does tend to decrease at a fairly good clip. So I hope that makes some of the people here feel a little bit better. Customer response to installment payments tends to be very good. We've seen this in several geographies around the world. And then global demand for local goods and services is a factor that many e-commerce companies just underestimate, and we're already seeing the kind of that in existence in the Middle East already. So we expect to see that to continue as well too. And then kind of the last thing, and maybe the key takeaway from this, is that knowledge of your customer can lead to innovation. And ultimately, in every market that we work in, whether that's in China or in India or in Thailand or in the Middle East, the solutions are always based, the best solutions are always based around data from your customer, or just a deep knowledge of what people want in your geography. And there's very few, if any, kind of cut and paste models that you can use to just work in one geography and the other. And another reason why you see so much investment in local e-commerce, local logistics companies, local payment companies, because they understand their customer. And those in these really niche markets are usually the ones that become quite successful. So that's everything I have for you today. If there's any questions, I'm happy to field any. Yep. Yeah, if you can. Yeah, show.
Hello. My name is Gustavo Montero. I'm the chairman of Agar LLC. Agar is a blockchain factory. We make blockchain companies, and we produce cryptocurrency. We're based here in the UAE. But in my prior life, I was the CEO of Standard Chartered Bank, a bank you may know. So my question to you is, how do you see the relationship between e-commerce, banks, and financial institutions? What are the key trends in that environment, and particularly what's happening in the GCC?
Yeah, that's a dissertation there, but I'll do my best. So between banks and payments in e-commerce, I'll address that one first. So it varies hugely between geographies. I lived and worked in China for 5 years, kind of at the boom of fintech, where I saw the most antiquated banking models possible just be completely stepped over by Ant Financial and then after that WeChat Pay. So I think that started about 2010 and 2000 to 2015, where things really took off there. And how they work together, I mean, I'm working in the UK now, and I work out of London, and I see similar, but you know, the banks aren't quite as antiquated. They're making huge steps to be innovative, but the reality is that they're huge juggernauts, and it's very hard to turn a large ship. When you have all this venture capital investment, not just in London, not just in San Francisco, but in Shanghai, in Thailand, you're seeing Chinese companies just expanding around the world, and in the GCC, that they're finding these small companies are finding these great solutions, and they're offering them to people that actually want to use them, and they're doing them at a faster rate around the world. That is completely consistent, that they're tapping into that need. But to kind of the larger financial institutions as well too. So if we're looking to kind of investment houses, those people tend to be moving very quickly in lockstep, whether they're opening private equity and venture capital firms, and they're kind of getting a foothold, a strong foothold in this space right now. I hope that answers your question. I'm being told that I'm out of time.
But I still have one more question.
Yeah, shoot.
This is something that's not related. We're talking about payments, we're talking about money, we're talking about fintech. But I get the question, from LinkedIn, and I believe it too. So what can we learn from Asia on trust of sellers and products? Has nothing
Yeah.
to do with the payment. Everyone hears that Emirates Airlines tickets that they bought online.
Right.
Emirates Airlines has no problem with cash on delivery.
Right.
How can they start to solve that trust problem
Yeah.
in Asia?
Yeah, for sure. I mean, that really gets at the crux of kind of the growth question. There was a huge trust issue in pretty much, I mean, that's one of the first issues that you come across in the development of e-commerce. So once you start along that path to get people to make that first transaction, what you need is to build that trust, and that's why cash on delivery exists. So it's not just one thing that you can do in any case. It is slowly chipping it away at it. But the important thing is to offer people what they want first. to make that first step out, put a toe in the water, and it usually happens on the part of the payments or the e-commerce company or whatever transaction you want to think about it in the context of. But you have to give the people what they want, and then you can start asking them to do things the way that you want. So,
So bring them in and then take away their toys.
in a matter of speaking, yeah, I mean, but maybe show them what the advantages are of other methods of payment, right? So, I mean, I talk about trust in terms of payments because I think that fraud is a huge concern. But there are advantages, and you know what? You do things like, this happens to me, so I'll give you a personal example. I like to use, when I go around, I like to use my Amex, but it is, not everywhere accepts it, so I end up using MasterCard or Visa sometimes. I get points on my Amex. But those are the kind of the carrots and sticks that are being put in front of me to encourage me to use something that I wouldn't otherwise use, and that's the approach, give or take. I'm being told very strongly that time's up.
Thanks so much for all the insights.
Thanks very much.
Thanks.
Pleasure.